Hey, Aiza, why are you looking so stressed?
I don't understand this topic.
What's topic?
Cooperative society.
Oh, I think I found this one video. Let's take a look.
Assalamualaikum and hi to my dear Inayah and friends. My name is HUSNA and in this video we will present about the cooperative societies. So what is actually means by cooperative society? A cooperative society means any society registered under the Cooperative Societies Act 1993 and it is incorporated under Companies Act 2016. This cooperative society is given special incentives by the Act in order to encourage their growth for the advantage of the community. Now I will explain on the exemption for cooperative societies. This exemption is divided into two categories, which are commencement under paragraph 12 subsection 1 subsection A and members fund under paragraph 12 subsection 2. For the commencement, all cooperative societies that have been registered are tax exempt on all its income for a period of 5 years commencing on the date of its registration. This means that the cooperative does not have to pay tax for 5 years starting immediately after it has been registered. Meanwhile, for the second category, which is members fund, it is stated that after the first 5 years, cooperative societies that have members funds of less than 750,000 on the first day of the basis period for the YA, it will continue to be tax exempt on all its income. This is done to promote their development in the society. The members fund here means the total aggregate of all the followings, which are paid up capital in respect of shares and subscription, which exclude the bonus shares issued out of capital reserves from the revaluation of fixed assets, statutory reserve funds, reserves which is other than revaluation reserves, balance of share premium account which is to be transferred, and balance of profit and loss appropriation account.
Assalamualaikum and hi. I am QAISARA and I will talk about accessibility of receipts. First thing first, about the receipts dealing with members, which is the principle of mutuality will apply on the contribution that made by members only. Principle of mutuality is based on the idea that a group of people who contribute to a common fund and then shares its benefits are not engaging in a trade or profit-making activity. Instead, they are simply pooling their resources for mutual benefits. Contributions such as entrance fees, membership fees, or subscription will not be income in the hands of cooperative societies. This contribution will not be treated as income. For example, the members of sports club pay annual fees, which are used to maintain the club facilities. These fees are covered under the principle of mutuality, so any surplus will not be taxable. Next, investment income. If a cooperative society is not tax exempt, it must pay tax on investment income of rental derived, as this does not fall under the principle of mutuality. This income will be treated under normal rules. For business income, when a cooperative society is carry business dealing, it will generate income. So, the income is subject to tax like other entities. Next key point is about the taxpayer's primary purpose. If the cooperation society purpose is to generate income, hence, the activity will likely be classified as business. Conversely, if the purpose is purely charitable, without profit motive, it might not qualify as a business. For illustration, Lower Perak Cooperative Housing Society versus Ketua Pengarah Hasil Dalam Negeri case shows that the cooperative society's priority purpose in acquire land is to provide housing to its members. It was held that the purpose was not to make profit, but to provide housing for its members, which means the profit derived was classified as capital gain, not as business income. So, it will not be subjected to tax. That's all for me. Thank you.
Hi, Assalamualaikum. My name is NAJIA ILISA, and today I will discuss the key principle and legal interpretation regarding the carry forward of CA, capital allowances, and business losses during a tax-exempt period for cooperative societies. This topic is from the legal interpretation of Para 12 of Schedule 6 of the Income Tax Act 1967 and key case law decisions. Here we can see the primary objective of granting tax-exempt status under Para 12 is to confer benefits on the members of cooperative societies. However, this does not explicitly define the type of income eligible for exemption. This could mean gross income, adjusted income, statutory income, aggregate income, total income, or chargeable income. This ambiguity becomes particularly important in cases where cooperative societies incur losses during the tax-exempt period. Next is the tax authorities' practice. The tax authorities is known to adopt a strict interpretation. They argue that since income is exempted in the gross income level under Section 1275 of the Act, all sections related to tax losses and capital allowances should be disregarded. MCI Society Limited versus Ketua Pengarah Hasil Dalam Negeri 1995, this case provided clarity on the meaning of income for tax exemption purposes. The Special Commissioners of Income Tax (SCIT) ruled that income refers to income after the deduction of expenses and allowances. From the Augustine Paul statement at the page 2284, tax exemption applies to chargeable income, which is income eligible for taxation after allowable deduction and allowances. If there is no chargeable income, the tax-exempt status becomes irrelevant because the cooperative would already be exempt from tax by default. Allowing losses and CA capital allowances to be carried forward aligns with the Act's objective to benefit the members of the society. From Augustine Paul's statement, we can interpret that cooperatives are entitled to carry forward adjusted losses and unutilized capital allowances incurred during the tax-exempt period. This can offset statutory business income in subsequent years. For this case, the High Court has decided income under Section 127 refers to chargeable income. Cooperative societies can carry forward unabsorbed losses and capital allowances during the exemption period. This can be used to offset future statutory business income. This has been agreed on by both the High Court and the Court of Appeal, which solidifies its application.
Assalamualaikum, my name is Muhammad bin ROSLAN, and I will explain any special deduction that are granted to cooperative society. As a quick review, cooperative society are granted with a two special deduction, which is under Section 65A, Subsection A, and Section 65A. I will explain about Section 65A, Subsection A. Section 65A, Subsection A is a fund transfer made by a cooperative society during the basis period for that year to a statutory reserve fund. Any education institution or cooperative various fund will be allowed as a special deduction. However, the maximum sum of fund to be deducted shall not exceed 25% of net profit on that basis period. As a result, cooperative society need to be choose lower amount between amount transferred to various fund or 25% of net profit on that basis period. For Section 65A, Subsection B, the amount equal to 8% of fund member as the first day of the basis period for the year assessment are allowed to be deducted. So, what is member fund? Member fund include paid up capital, statutory reserve fund, balance of share premium account, balance of profit or loss appreciation account, and any then capital reserve for revaluation of the fixed asset. I provide a picture to describe how the statement will look like.
Hello everyone. Today I will discuss a key aspect related to taxation for a cooperative society, focusing on dividend, interest, tax administration, real property gain tax, and the applicable tax rate. Let's begin. First, dividend paid by cooperative society. Dividend paid, credited or distributed to members by a cooperative society are exempt from income tax in the hand of the members. This means that even if the cooperative society is not exempt from tax purpose, the member do not bear any tax liability on this dividend. Next, interest paid by cooperative society. Since the 30th of August 2008, any interest income, gains, profit or bonuses paid to a resident individual by a registered cooperative society are also exempt from tax. This is in accordance with the Income Tax Exemption Order 2008. Tax administration. Cooperative society are required to submit Form C1 to the tax authorities. This submission must be made within 7 months after this financial year end. Real Property Gain Tax (RPGT). Let's look at the tax imposed on the disposal of a real property of share in a real property company (RPC) by a cooperative society. This applicable rates vary depending on the holding period of the property. For property held 3 years or less, the tax rate is 30%. For properties held 4 years, the rate is 20%. For properties held 5 years, the rate is 15%. For property held more than 5 years, the rate is 10%. Is it worth noting that prior to the 1st of January 2022, the rate for properties held for more than 5 years was lower at just 5%. Tax rate for cooperative societies. Cooperative societies are taxed at a scale rate based on their chargeable income, as specified in the Income Tax Act 1967. The rate as follows. These progressive rates are designed to provide tax relief to small cooperative societies with a lower income. In summary, cooperative societies enjoy several tax benefits, including exemption on dividend and interest. However, they must comply with the tax administration rules, real property gain tax, and the applicable scale tax rate to ensure proper adherence to tax law. Thank you for listening.
Oh, okay, now I understand. Thank you, AZIB.
You're welcome.